Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, January 19th, 2023. Please click like and subscribe if you haven't already. And please share the content, if you would, with friends and colleagues. It helps us out a great deal. Backtrack just a little bit to remind you the big picture. Still anticipating over the next 3 to 5 weeks or less this 158.81 to 166.92 long-term price ceiling, long-term resistance area. This channel structure, it held monthly lows back in, was it November, roughly? And then the week of December 12th, we violated it outright. It had been considered able to contain selling through Q1, and from there, recovery anticipated, but not to be. And having closed back below it or below it December 12th, the week thereof, our next signaled support was reached within about 2.5 weeks, 95.29 to 106.99. And I'm showing this. This is the area that held, and once tested, I'd mentioned how we can recover and are indeed anticipating recovery into the 158.81 to 166.92 region. This area is dropping daily, dropping weekly, gradually, and is expected between now and the end of February, maybe sooner. I'll get to that in a moment. Able to contain buying through the rest of Q1. And from here, we can fall off again, possibly back to this channel structure within a month or two of doing so. So that is the big picture. Just a reminder, on the way up, following this test of midterm support, I'd mentioned how the upper 130s were considered a meaningful test of weekly resistance, 136.81. This trend line here off of these lows, if you can imagine, February and May of last year, we came very close to testing on Wednesday. I'm going to call that a hold. We fell off of it immediately. It's at 136.81 today and dropping. You can see it here in the support resistance area. Able to contain weekly buying pressures, and below which, the question is how far south can we go? And, let's see, I'm going to show another chart here that is more descriptive, I think, of the day itself. There we are. Here's your 136.81 trend line. So with respect to I'm going to just call it the 150s, 160s, that 158, 166 region that I mentioned is in reach by the end of February or sooner. That sooner would come with a settlement today above 136.81. And then we have continued price acceleration to the upside. And this is the vicinity. You can see that by the end of next week, if we close today above 136.81, we should reach into that upper zone of longer term resistance, which you can see once again right here, 158.81 to 166.92. Do I have it on a daily chart anywhere? Do I have it here? I do, actually. There we are. Actually, this says a lot. Once again, I'm jumping all over the place. I appreciate you sticking with me here. 136.81 is once again shown on this chart. That is a long-term trend line. As far as long-term trend lines go, I don't consider them to be trend defining, as ironic as that sounds, but I do consider them able, especially that go back a year or so, able to contain weekly buying pressures. So we can come off from here. We can fall back into 115.12, which I'm going to show in a moment. This 112.12 channel top, it is still there, as you can see, as a minor point, but I'm not considering it a level that you can buy aggressively in anticipation of then bullish rotation into February. That's 115.12, which I'll show in a moment. So holding below 136.81, we can fall back to 115.12 over the next week or two. And on the way down, let me find this chart. 125.40. There's a lot going on here today. This trend line coming off these highs did hold roughly yesterday. 125.40. I think it was in the 127 handle yesterday. We broke below it just a bit, maybe 120. I don't remember actually. 125.40. Can contain daily selling pressures. So I'd like to zoom in here. Maybe we'll do that on the post-editing. Holding above 125.40 will keep 136.81 in reach today, where once again, we can place a weekly high and from here perhaps fall back to 115.12 by the end of next week. But closing above 136.81, once again, that 150s, 160s resistance expected by the end of next week, where we can top out through the balance of Q1 and if settled above, should mark a good long-term low for Tesla. I'll remind you of that. I've been saying that, but I need to remind you once again that if we can muster a end of week settlement above this 166.92 structure, that would mark, I think, a good low into later 23, possibly the balance of the year. I would then expect the 230s, 240s over the following 2 to 3 months. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. But let's get back to sort of the day itself. You've got 136.81. We also have the 125.40 level. And I'm going to jump to another chart here in a moment and zoom in this 125.40, emphasizing the downside today that if we do break 125.40, and that is that trend line here. You don't see the beginning of it, but it is our support for the day. And there are other things going on in here in the 125 handle. This high, I think, was 125.95, as I recall, so forth and so on. 125, our pivot point, above which 136.81 in reach again today, that long-term trend line. But if we break or open today below 125.40, 119.36 in reach. That is a new rising channel bottom off the highs here. This first pullback high, yesterday's high against the move low from a couple of weeks ago, 119.36 in reach today if we break or open below 125.40. So that is your day trade. 125.40 is your pivot point, above which, you're buying 125.40 in anticipation of 136.81 again on an intraday basis. And once again, 136.81 is this long-term trend line coming off this the February, May lows of last year. But getting back to this chart, where are you? Did I lose you? No, right here. Getting back to this chart, if we break 125.40 or open below 125.40, 119.36 is likely intraday. That could be it for the day. But if we close today below 125.40, we should test possibly tomorrow 115.12. 115.12 is a rising 2/3 speed line. And I can show it better here. I should probably show that more. I think I'm going to show a graph here over the next day or two that shows you how to construct these speed lines. I do get a lot of questions about that. It's a pretty simple construction, but it is based in part on yesterday's high against this low. You take the difference between the low and the high, 2/3 back, 0.666. The pullback, and the trend line is then projected from the low in the time frame in which the high was made at the 2/3 retracement level. I don't know if that made any sense or not, but 115.12. Let's go back to this chart, and I'm jumping all over the place, but if we close today below 125.40, just know that over the next day or two, we should fall to 115.12, which is this rising 2/3 speed line, able to contain selling through next week. Now, this is your pullback support through next week. From here, we can regroup and rally back into that 136 area. So this 115.12 speed line, if tested over the next few days, able to contain selling through next week. And from there, we could rally back to the trend line again at 136.81 within a full week of trade. It would be a settlement below 115.12 that would tell me this market is likely to unravel by the end of next week or within a full week of trade back to this channel support in the 95.29 to 106.99 region. So I threw a lot of numbers at you. I hope it made sense. It is a challenge putting it all together. I've been breaking time frames down from the day, 3 to 5 days out, 3 to 5 weeks out, and 2 to 3 months out. Those 4 primary time frames is the way I view the market. And that is the way the market behaves. Right now, this rally off of this support region in the 95.29 to 106.99 region can be considered counter trend. Counter trend because the long-term outlook remains heavy below 158.81 to 166.92. And then you can break that time frame down, that 3 to 5 week time frame down into this area here, kind of a 2 to 3 week time frame, 1 to 2 week time frame, 136.81. We just hit yesterday our 1 to 2 week target, as you recall, above 112.12, this channel top. We met the objective, and now we can fall off back into the 110s again, 115.12 that I showed a moment ago. But closing above 136.81 is considered an eventuality sooner than later over the next couple of weeks, maybe today. And if we do, this long-term resistance zone between 159.03 and 167.43 expected by the end of next week, where once again we can top out through the rest of Q1 and fall to new lows following that test, and if settled above, signals a good long-term low. I'm pushing 10 minutes here. I don't like to go past that. I'm going to leave it at that. Please click like and subscribe. I'll be back tomorrow with Friday's Tesla report.